So this is PayPal. PayPal isn't one of my 5 quality companies where, if it drops, I buy more. Having said that, it's pretty much on the cusp that I treat it like that. And if we look at PayPal, and look, we're going back to 2017, you could argue, well, wait a minute, Alpesh, look at this. What a wonderful company. All it seems to be doing is going up, 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 up. And if you follow that upward trend line, then it'll find a base at around 1500. So it's still got room to fall. It's fallen off a cliff. It's gone from 30 to 15. Well, it could drop 50%. Actually, that's in the realms of its normal volatility. It's not a Microsoft, for God's sake, okay? Welcome to the stock market. Is there a problem with the company? Is it about to go bust? Is it got some kind of fundamental problem with cash flow, valuation, revenue growth? No, it's been going steadily like this. It's rocketed up and tripled in value. And the market, my crystal ball didn't tell me the market would do this. The market has decided to take some of those profits and punish that one in particular. If I could time it to enter at that point at 10 and exit at 30, I would. But we don't. Am I holding on to it? Yeah. Do I think it could go as low as 10? Probably not. Will it go to 15? Probably. So why don't I sell and get out there and get back in it? Because I'm not trading my investments. Would I buy more? I have no problems. I'm fully invested at the moment, but I wouldn't have problems once double dipping, i.e. buying more at a discount. But it's one of those rare companies which I'm treating pretty much like a quality company anyway. Would I double down and go nuts over it? No. Keep calm. And so that's where we are with it, which hopefully gives you an insight. Do you trade your investments? No. Do you work out whether or not you like it as a quality type company? Yeah. Then do you buy more? Well, if you're more risk loving, yes, you do. If you're risk neutral, no. If you're completely risk averse, then you would have got out when it dropped 25% from its peak. If you're totally risk averse, those are the rules. So from 300, 25% of 300, he says, which would be about what, 23.5 would have been the price, I think. 22.5. So somewhere up here you would have had to have exited when it dropped 25% off 300. But me, no, because with this one, I was happy to keep holding on. It's the kind of thing which I know I'll get a market beating return, even if I'm holding it for 1 or 2 years. Anyway, hopefully that gives you some insight over it. And you can see if you were to look at the cautionary or the more steady long-term uptrend, which would be sort of going that way. I'll try and draw it here if the computer lets me. Yeah, that one. Then you could argue, well, it'll probably find a base somewhere around, like I said, just above 15-ish. Won't necessarily have more to go. Having said that, that's pretty, steep. And therefore, if somebody said to me, I'm going to put a gun to your head, can you guarantee me it won't go to 10? I'd say, no, I'm not guaranteeing that at all. Because good quality companies can go from 300 to 100. Yeah, that's because it's a higher volatility play. Probably if you didn't like that roller coaster ride, what it tells you about your risk profile is that you probably don't want stocks with a volatility greater than, say, 20% volatility, okay? Because they'll give you that ride. You don't want that, right? So go for less vol. What it also tells you is if you don't like it, then you might have wanted that 25% stop loss. Equally, if you're like me and you think, well, I don't mind a bit of volatility as long as it's a good quality company like PayPal, then you'll say, well, it's going to take a bit longer. Think of it like house prices, but I know it's a good house. It'll eventually get back up there again. I mean, one way I look at this one is cool. It's at whatever it is at the moment. Let's call it 200. It's at 200. I'm going to make a 33% return when it gets to 300. If I make that in a year, I'm happy. If I make that in 2 years, not so happy, but it's all right. I don't think it'll take 3 years. Okay, hopefully that gives you some more insights into thinking, particularly with PayPal. Thank you.